Hey, what's up, everybody? It's Thomas Few Sr. Just checking in with y'all. Drop y'all a quick video, man. If this is your first time here, welcome to the channel. I'm excited to have you here, and I want you to, first things first, go ahead and hit that subscribe button so you can get notifications, and it'll let you know when anything new is dropped in or any new content hits the channel here. But I also want to encourage you to be active. Let's jump in and enjoy and get in the community and actually enjoy it, share, comment, talk to each other. We all are working together to master this money game. I don't have all the answers. You don't have all the answers, but I think together collectively, we can figure out all the answers, right? So so now that we have that out the way, let's jump into the topic of the video, right? You saw the topic, right? Is owning your home an asset or a liability, right? Is it an asset or a liability? This is like an age-old question. It's almost like which came first, the chicken or the egg, right? A lot of people have had this discussion, this debate of whether owning your home is actually an asset. And I think in order for us to determine that answer, first thing we have to dive into is what is the difference, or what is an asset and what is a liability? And in order to do that, what I'm going to do is I'm actually going to read the answer. This is straight from Investopedia, which is the financial resources online, has all kind of different financial topics and definitions in there. So we're going to start there just to kind of open up a little bit about what is an asset and what is a liability. So let's read what the textbook definition of an asset is. Let's go. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Let me read that for you again. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. I want you to let that sink in and think about that. Now we're going to read the textbook definition from the same site, from Investopedia. What is a liability? Now let's see what they say about liability. A liability is something a person or a company owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services. Let's read that one more time so to make sure everybody got it. A liability is something a person or company owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services. So now that we got both of those definitions, is it an asset or a liability? Asset or liability? Based upon the textbook definition, I'm going to have to go with your home itself, just your home, is indeed an asset, because you have to look at the definition and break it down. It says it's a resource with economic value. As you know, your home itself will hold some economic value in the marketplace. It says that an individual or corporation or country owns or controls. So that means if you own your home, that means you own it or control it, right? With the expectation, with the expectation that it will provide a future benefit, right? What could that future benefit be with your home? It could either be equity that grows into your home that you may be able to access as it can increases in value, economic value, or when you actually get to the point when you're ready to sell your home, of course, you put it on the market and it's going to sell for whatever the current market value is deemed at that point in time. And of course, you would walk away with whatever equity that you have built up in that home up to that time period. And that is what actually makes your home an asset. Now, where people mix this concept up because people automatically lump in your home with your mortgage that you owe on it, right? Because when people go out and buy a home, very rarely do people pay cash or full cash, when they're actually purchasing a home. So they're going to have a mortgage on it. Now, a mortgage is actually an interest in your home, that the bank has, right? The mortgage is that note that you're going to pay on a monthly basis. You're going to pay this fixed payment over a certain amount of time in order to repay the bank for advancing you the money up front to go out and make this home purchase, right? So you have a mortgage on one side and you have your home on the other side. Now, if you're looking at it from a accounting standpoint, right, I want you to think of it like this. There's this thing called a balance sheet, and a balance sheet on one side is going to have assets and is going to have liabilities on the other side, right? So I want you to think about that. So your home would actually be on the asset side of that balance sheet, right? Your mortgage would be on the liability side, right? So think of it that way. Going forward, you have to separate the two because they are indeed two separate things. Like your mortgage lender only has an interest in your home. You still own it, but your mortgage lender has an interest in it as long as you're continuing to make those payments. Now, once you make those payments and you've paid the lender back, the money that they advanced to you, now you own that home, what they call free and clear, right? Which means you no longer have a mortgage on it. You own the home. You don't have to make a mortgage payment. Now, does your home still have expenses moving forward or liabilities moving forward? Absolutely, right? Because as long as you own that home, you're always going to owe what are called real estate taxes, right? So you're going to be charged those taxes on a yearly basis, and you'll have to pay that to your city, state, to your state or, organization in order to make sure that you're paying your real estate taxes on a regular basis, because they're always going to have an invested interest in that property as long as it's, on that piece of land, right? There's also going to be things called maintenance expenses and overhead costs for that particular home over the time period. So that's always going to be on the liability side. So will a home ever not cost you any money? On some level, it's always going to cost you some money, right? It's always going to be some maintenance. It's always going to be some taxes. It's always going to be repairs, different things that you have to do. But think about it. Those are always going to be on the liability side of your balance sheet. On the asset side, your home is continuing to hopefully increase in value, right? So at the end of the day, what you're trying to build in between is equity, because that asset is growing and increasing in value. Your liabilities ideally are going to be decreasing, and that gap and spread in between is that equity that you're growing in. That's your ownership stake. Like that's the part that makes home ownership sexy, is because you're building up that ownership stake in that particular piece of property, right? So I just want again, just to do a quick recap, we got to start separating the two. Owning the home itself and the mortgage are two separate things, right? So the home is an actual asset because it does have economic value, with the expectation that it will provide a future benefit. That's literally the textbook definition, right? So that makes the home an actual asset that you own, right? The mortgage is on the liability side, right? Because you're going to be making periodic payments over a period of time to get rid of that particular debt or that particular liability. So separate those two. That makes it a lot easier. I think we try to overcomplicate things by, if it's making me money, it's an asset, or, or this and that. We try to come up with our own definitions. Let's look at the textbook and make sure that we're understanding what our financial terms mean. And when we use them, we're using them in the proper context. All right. So I know this probably is going to surprise a lot of people, especially I hear a lot of financial professionals out here all the time say your home isn't an asset if it isn't generating income. That's not true. It says if it's an asset, it just has to have the expectation that it will provide a future benefit at some point in time. It doesn't have to actively be bringing you any income in the current state, right? So I think we all need to take a step back and really make sure that we understand the financial terms that we're using and the definitions, so that when we go out here and spit out facts and spit out information, we're giving out the absolute best information possible. All right. Hope that helps y'all. Talk to y'all soon.